Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hi, everybody. Welcome to Mortgage on My Mind. Today, I have the just most bright and beautiful guest with me. He has the most incredible energy, Scott Griffin. He is a nationally recognized mortgage expert and the founder of Scott Griffin Financial. It's a firm that's dedicated to helping homebuyers and investors and self-employed borrowers, which of course is my specialty, navigate through their mortgage solutions. And he's also the national host of Financing the American Dream, which has aired on like CNBC and ABC and Bloomberg and the Travel Channel and Fox. It's okay. Where he partners with the top real estate professionals to provide insights into lending strategies.
Oh, that's delicious. What a treat to be here. Natalie, talk about somebody with great energy. That's you. And an amazing smile and a whole bunch of beautiful spirit of yes, you can.
Yes, we do our best.
Why? Well, because yes, you can.
Because you can.
You can.
Mm-hmm. Totally.
It's a treat to be here with you today. Thank you for hosting.
Such a treat. Yeah.
You know what I've learned, Natalie? I've learned that I don't ever remember taking that class growing up in school that taught us how to do all of this. And
I
so
know.
Floating out there with a whole bunch of, well, I don't see myself as that person.
Mm-hmm.
That's just because you hadn't listened to, well, Scott and Natalie visiting yet.
Not exactly. I say to clients all the time, like, it's not like somebody taught us how to do this. And it can be quite complicated. There are a lot of steps and a lot of things to know and understand. And the process is fairly overwhelming. And you walk into it having no experience or like, I remember my parents got a house. I don't remember anything about how they did it. And nobody told us. So it is important to have.
We're not supposed to speak about those things, right? Like, what do we earn? What are we spending? What's in the bank? So how do you explore those conversations? And well, for me, Natalie, I'll never forget that ride in the elevator. Her name is Peaches. And that was me trying to refinance my first condo, my first home. And the bank gave me a loan application. It was 5 pages in this folder, legal size documents with a whole bunch of fill in the blanks. I honestly was so overwhelmed. And then they gave me a list of items they wanted. I just felt like maybe I shouldn't even be doing this. Feels like too much.
Yeah.
So that was the late 90s. And do you know what I love about the modern time of the right now? Technology.
How easy it is.
Technology inviting complicated to feel much better. Why? Well, because it is.
Yeah, totally. It's incredible how when I'll tell somebody about the loan application and going online and filling it out, I'll say, listen, just give me the bare basics. Like put in your housing and your employment information. That's what I need. And don't even worry about the numbers because I'm going to go in and change them. You're going to put them in, you're going to calculate, and then I'm going to change them. So don't even worry about what you put in there. And just get through it and upload the docs, and then we're going to make it simple. And I do say, but what about your file do you think I need to know?
Yes.
That's what I need to know. What do you think could possibly complicate your file? That's what I need to know. Yeah.
I like to call those yellow flags. And I've learned in the industry how to find them quickly. And
Yes.
that's the gift when you meet passionate people that show up. They help you to find the way to yes. And they do it by asking you great questions that invite the experience to be smoother, easier, well, so a lot more elegant. And it's the questions we didn't know to ask that often leads to those emotional misunderstandings if they were to show up. And that's why working with Natalie and we were visiting before the microphones came on and just visiting two passionate industry professionals enjoying
Can
what.
you not love this energy? I just want to be on the phone all day with this. Like, come on. It's,
Yeah, let's do it.
literally feels sunny just from you being, it's
Well,
like raining and cold out, but all of a sudden everything just got sunnier. It's great.
That's right. And you know what instigates it, honestly? Okay, so please, I love morning walks. I do it before I kick into my work business mode, and I use the moment to paintbrush with new ideas, but I also use it to reflect on all the yesterdays. And do you know what I've been doing recently? Appreciating the modern color of today. I was reflecting on how we as an industry have been stuck in the world of vanilla only. So after the meltdown of industry of years before, everybody's been asked to show up in the same format. And
Yeah.
we're individuals at the end of the day, and California is the entrepreneur's playground. So, a self-employed individual, as Natalie, you and I know, what tax returns just tell the lender how good your CPA is. It didn't answer their master question. And
Yeah.
the real question was, will you pay me back? And so,
Correct.
if you're self-employed, well, just ask better questions. And we've been tied, our hands behind our back, unable to ask you, self-employed, well, what did you deposit? What did you really earn? The
Correct.
questions that we used to ask in the
What's the real gross?
correct.
And then we can decide how much of that is actually being earned so that you can decide, hopefully anyway, as a responsible owner, how much you can actually afford. And we together come up, and yes, there are so many programs now that allow
Awesome.
us to
That's what
get
I'm in
off the
love
tax
with.
return. Yeah.
Okay. So Natalie, so look at my goose pimples are coming. You know why? Okay. So on my morning walks, I love to try to find beautiful in the ugly. And I
Okay.
think high interest rates have a feeling of ugly. So that was my question one morning. And I thought, Scott, what do you love about the high rates? Well, that was a hard one. Here's what I found. I found three things. So high rates often remove competition. So as the rate climbs, my competition often leaves, waiting for the rate someday to come down lower to come back and try again. So the less competition means I probably got a better chance of the seller's yes at the terms that
Sure.
I'm trying to grab at. So I'm in love with high rates giving me that negotiation tool.
For
I
sure.
love tax deductibility. Is kind of odd to think that I want a high rate, but oddly enough, for some of us, based in our income, that higher rate gave us a higher access to tax strategies that repositioned everything. And for some of us, it can be dramatic. It can move us into another price bucket.
For sure.
That's home ownership with high rates. And the third one, okay, this one is kind of like my personal favorite. And why? Well, you can't create great ways to yes if people aren't bringing their money to the show. And when rates were ultra low, investors or places where money comes in to for you and I to borrow to finance homes, where they weren't coming. Why? Because there was not enough return. So they
Right.
weren't willing to part with their dollars for your mortgage. Well, guess
I
what they're
would.
willing
Yeah.
to do when the rates are high? Boy, not only are they willing to part with their dollars, they're grabbing their cousins and sisters and getting their money to give you too. Why? Because the rates are higher, inviting them to come in. And you and I, as consumers, want them in. That's how we get to different ways of yes together. Because at the
Yeah.
end of the day, we're individuals. And
Yes.
being in the industry as long as Natalie and I have, watching people become incredibly successful for what they're doing in real estate, we've also witnessed others with the story of not yet, even though they were qualified for yes, you can. And that's
Right.
simply because the guidelines weren't available for us yet.
I have two funny things. So I think there is an actual number of every time an interest rate goes up by 1%, I think it's like 5 to 7 million people drop out.
Isn't that something? Yes.
And they drop out. These numbers are, they become unqualified. That's not even the number of people who drop out for fear of the high interest rate, which is all the people I knew. Most of the people who dropped out were like, we're going to wait. With the people who didn't make enough money to continue moving forward at a 6.5 or 7.5 or whatever, they wanted the home still, but we had to tell them to wait. And, and so it's an interesting, that's a great part about interest rates being higher is 100% you get the house a lot of the time for lower. It's why we've seen values, even though they're still going up, it's Los Angeles and most of the country as well, still going up. They haven't been going up in the crazy ways that they were.
Not the way we were, no.
Not the way we were. And then the other high interest rate means more of a tax write-off. I actually never thought that I would have this conversation with somebody who's at literally 3.1. I have a client who's at 3.1 and she's in an FHA loan.
Okay.
Now, if people out there don't know, FHA is an insurance company. So regardless of how much money you have in equity and how much money you put down, you will always pay insurance because it's an insurance company. So MI stays on there forever. So she's going to always have this $620 FHA MI payment. Now she has a 3.1 and a $620 payment for MI. And I said, listen, I'm going to let you just think about something. I'm going to let you ruminate on this. Come back to me whenever you want. My FHA rate right now is around 6, depending. Yes, it's higher, but the payment actually is only $440 more per month. You're saving like $180, but what you're saving on is the money you can never write off. We're switching that payment into your tax deductible portion of the payment. You're taking away this $620 of MI that's not tax deductible, and you're adding back $440 of tax deductible. This is your interest rate. This is interest that's being paid. So having a higher interest rate, yeah, I get that it's a hard pill to swallow, but it's actually not. That's your tax deduction. And she was like, I have never thought about it that way, blah, blah, blah. And then the next day was like, all right, we should start this because it literally doesn't make financial sense for her to be paying so much in MI.
Not at all. Isn't that fun? So then what passionate people do, we get excited about how you can win. Remember, this is that class that we never got invited to take as kids growing up. But those passionate folks created a career around understanding the intricacies of the instruments that we're all invited to use, but never showed us how to do it.
The pros and cons of all markets, of no matter where we're at, why it still always makes sense to buy.
Yes. I think we all played Monopoly growing up. We know who won the game. Well, the one who had the houses. That's how you win. You build a portfolio. And you know how we do it? Well, use somebody else's money. Don't wait for you to have it all. You know what else I love about the modern color of today? Natalie, I think people stay renters longer than they should. And I think we do that because it's expensive to step into the first house, even if we embrace the power of low down payments. 3% of expensive is expensive. And I, as a renter, might not have that available today. So in my mind, when I hear people talking about housing, I just hear like fuzzy noise. It doesn't even speak to me because I don't think I can. Well, for a while, that's true. But that's, again, what I said I love about the high rate environment. It brings solutions that wouldn't be here otherwise. My favorite one, Natalie, my favorite. Because when I was younger and got my first house, I literally knocked on a neighbor's door for money to borrow because I didn't have enough for all the closing costs. And I had family to get it from. So I'm like, I want to win just $1,500. I paid it back. What I love about today, You don't have to knock on a neighbor's door. Instead, the program through FHA 100 supplies 100% of the down payment, and the seller is invited to participate in all of the closing costs, not to exceed 6%, which is going to be all of it. So you can literally get into your new house today, or condominium, or duplex, or any dream that you're sitting with that you didn't think you could. Well, yes, you can.
You can actually finance a 5% second, not just a 3.5.
Right. And what Natalie's saying in that story right there, because she and I understand what all this means.
Of course.
But what Natalie is saying is that, guess what? If the seller won't help you, don't worry. The bank has a little more love to give. Get out of your rental. Stop renewing. You don't have to. You literally can become a homeowner. If you make your on-time monthly committed rent payments, you're going to probably do the same great work on your home ownership payments. And the bank knows it. In fact, you know what's so cool, Natalie? It's so fun. What else I love about technology is that it doesn't forget. And I can. And so all loans, as you and I know, Natalie, they're all measured and tracked on their performance for payment. And it's really funny because I used to think that down payment determined whether or not a consumer is going to make good on their loan. And it's really unusual to find out that's not really it at all. The best performing mortgage in America is a VA loan. And that one has a 0 down payment as a commonality. So it's not down payment that does it. I think it's commitments that we make in life and holding the commitments we create that determine if we're going to make that payment or not. And it's not down payment.
Yeah. Yeah. I think that's still, I believe, the largest misnomer of getting into a property. People think you need 20%. It is still shocking to me how many people come to me telling me that they're waiting to buy for the down payment. And you're like, how much do you have? And they're like, we're at about 18%. And you're like,
yeah.
Well, fantastic.
We were done months ago. Why didn't we dance?
We can buy, you guys. Let's talk about it. Well, we don't want MI. We don't want MI.
Well, you know what we love
how
about
small
mortgage
MI is at that time.
For those who might not know MI, Natalie and I, I told you earlier, as two passionate people who we don't even know we're working. We love what we do so much, helping others win in the houses they're financing. So mortgage insurance. You know, that's another thing that I found ugly and pretty inside the same moment. Okay, so nobody wants to really pay mortgage insurance, right? Because it's non-tax deductible, like Natalie highlighted. And for some of us, it can be a large number that's getting paid. But here's the gift. Okay, I don't think you're going to get me to leave the magic machine that I put $2 in it and it gives me $6 back. I'm going to be at this machine for a while. And mortgage insurance is exactly that type of machine. What's it busy doing? It's inviting me, the buyer, to get the house, even though I don't have a 20% down payment. The insurance policy joins me on my homeownership journey so that I can experience equity development through home ownership. And equity development is going to be much more valuable than anybody's mortgage insurance premiums. So are we sure we don't like mortgage insurance, or did you think maybe we love it? Why? Because it invites us to yes today. And who makes the wealth? Those that activate and actually take on home ownership. It's hard to build home ownership without actually owning one.
Yes, of course. Beautiful, beautifully said.
Well, that's the gift of why I'm in love with 2020. Well, we're okay. I don't mean to timestamp, but this is a really cool time in life. It's delicious. It's a whole bunch of yes, you can. And there's so many, if the bank said you had to show up in a blue outfit, well, okay. It didn't say what shade of blue. Here's what I've learned. Everybody has their own shade of color of what blue means for them. And that's the color of today. It's the ability to see the color of blue that we like to have, but we can even see other shades that we might not have worn that day. And that's the gift in banking for home ownership in this season. So for those listening to us right now, just activate. Just reach out. You know what's so cool about podcasts is they work in everywhere there's electricity. And so We don't know where you're finding us from, but what we do know is reaching out to a mortgage professional is where you're going to start your guidance of how you can do it in your market, in your area. Natalie, as you already know, is amazing at inspiring and educating. It's why she hosts this amazing podcast. It's her desire to empower you with your story of yes, you can. Why?
Yeah.
Well, because Natalie and I know you can. And so, might today's visit with this great podcast be the invitational thoughts for you listening to us to do a couple of things. One, take a pause. Where are you at in life? Are you where you want to be in the spirit of your positions? Are you renting or are you owning? And then if you're telling me you're owning, well, then I think Natalie and I might have a new silly question to ask. Then my new silly question might be, how many rental properties have you acquired? Most of us sitting around today with our homeownership story, well, again, I don't know what zip code you're living in when you're hearing us today, but I bet what I'm going to say is true there also is that property values are worth more today than they were just a few years of yesterday. For many of us homeowners throughout America, we're soaking in equity. Here's something interesting. Equity, of course, is the difference between what my house is worth and what I owe. That difference between is my equity. But here's what I've learned about equity. Equity's lazy. Equity has a zero return, meaning that the more equity you produce in your life, no more wealth is being developed because equity is a zero wealth game. What do I mean? Equity is a number that we can look at, but it's not cash. We don't convert equity to real cash until the day we sell. Until that moment, it's numbers that live on paper, but equity alone is lazy. But you could put lazy equity to work.
Right.
You could get a loan, even if you had one of those sexy ones, that 2.75, 3.1 loan that you don't dare want to touch. Well, that's why the banks offer second loans as solutions. Why? Because you can literally purchase a rental property in America with 100% financing. You can literally put your lazy equity to work by transporting that equity through a home line of credit or a fixed mortgage that transports a portion of the purchase price. And then we marry that with another purchase loan, and both loans come together in one master event window, and that's you becoming a landlord. Talk about tax strategies and an entrepreneur. Well, remember I said earlier the Monopoly game, and we won by buying the houses. So my family, we have 3 rentals. It's amazing what happens when I look at what I purchased those rentals for, and I look at what they would be worth today if I were willing to sell them.
Yeah.
I can literally retire on my real estate holdings and stop working. I can put my dollars of growth in the bank and live off of that return I never could have if all I ever did was stick with the one house I lived in.
Yeah. We say equity is literally a bank account earning nothing. So it's money you have sitting in an account that's earning nothing. You would never have
You can't even access.
300,000, 400,000 sitting in an account that earns zero ever. But you can pull that money out. Yes, interest rates on HELOCs and equity lines or fixed seconds are higher, of course. What's great is that
They say yes, and now I'm a business owner. Give me your money again. How much can I get? It's
right.
true, Natalie. Rates are higher. Why? Because we're converting lazy equity and we're employing it to go to work.
Right. And that's the thing. So in LA, a lot of people, I started purchasing investment properties in LA because I had a super cush rental. So it was really hard for me to purchase. I did end up, of course, getting out of my rental, but I was like, I want to start earning equity in properties. And in LA, it's hard to buy and actually earn money.
Yes.
Because of rents and the prices are so high. And I had a very strict guideline for myself on how I was going to buy investment property. And I had to earn, for me, this is crazy and nobody should listen to this, but for me, I had to earn $1,000 for every 100,000 in loan amount I had. which is nearly impossible, but really hard. But I was able to get 2 that do that.
Delicious.
And then I was like, well, I want another. I mean, they kind of just about pay for themselves. I earn like very little on it, even though I thought I was going to earn more. It doesn't really happen. What's beautiful about an investment property, and what I tell people when they ask if they should get one, even though they're not going to earn anything or even end up being under. If we buy this, we're going to be under by $500 to $600 a month by the time we pay the water and whatever. I'll tell people, and this investment property for you is to sit on. It's not to be earning money regularly. You have money in a stock account. Do you ever see that money come out into your bank account every month? Never. It's sitting and it's earning you some money every year, and you let it sit or you have to pay taxes on it. Same thing with an investment property. Let it sit, because real estate is going to build you way more wealth than the stock market is going to build you. And you can't think about what you're earning yearly on it. You have to think about what you're earning every 3, 4, 5 years in the equity of the property, because very rarely in LA do you actually make money out of a rental unless you're putting a very large down payment.
That's here for sure, 100% now.
You know what I mean? But what I have now sitting in equity in my property, that's the retirement. That's the goal,
Isn't that delicious? And Natalie, you ready for this? Okay, because you're right. Investing in cash flowing real estate in Los Angeles is not an easy needle in the haystack to find.
Really not.
But everything's possible, but not an easy find. So it took me a while to understand this myself. Okay. I used to think that I had to buy the real estate holdings near where I lived. Here's what I've learned about real estate. The behavior and the way we can finance it is similar in other states as well. When we're investors, we're business owners, and we can take our business ideas and move them to other states that have a different cost basis, because I think some people are going to be looking for more of a cash flow event. If you're buying houses in Michigan, you can get cash flow to happen, even through a Section 8 holding. What you're going to miss is what Natalie, most people listen to podcasts, they don't watch them. But if you were watching us, you saw what I saw. Natalie's incredibly bright smile talking about her investments, even if she wasn't making tons of monthly rent. Her smile lit up so big and bright because she has that magic equity development. And equity development in LA is ridiculous. It's why we love owning LA real estate. It grows like not any other. And Natalie has that. She has incredibly strong equity development, and that's that fancy word for wealth. Monthly cash flow is cute, but equity development at large scales is even cuter.
That's what it is. Yeah. If I take what I have in equity that I've built, let's say even over the past 10 years, what I've built,
100%.
and I divide it by 10, there's your income.
There's absolutely zero loss. It's the opposite of loss. It's incredible wealth.
It's incredible to think of like, wow, that's an annual salary.
Nice way to
You
look
divide it by 10,
I never thought
right?
of it that way. I like that a lot.
Yeah.
Well, yeah, because it's true, right? Because
Right.
we walk around with different things in our mind, like this house costs this much and I get that much, and this one is this and this one is that. But at the end of the day, as individuals, we just have one master balance sheet, and we're responsible for the everything. So as I look at the net effect after everything was, tested and applied, what's that? Well, that's part of the math Natalie's describing, taking the full picture and then dividing it over the time of the relationship of how long you owned it. Now,
Right.
What did you do? Well, you're going to smile like she did. Her smile's so big, so bright. Why? Because she knows that she was capable of doing it. And I bet the first one was literally the first one. We hadn't done it before. How will we like it? How will I get a tenant? A lot of how questions often can stop us as people for taking action. Here's what's super cool about rental properties. You don't have to do anything. You can hire a manager. You can hire management, and you're just responsible for the dollars behind the story, and you hire an expert to manage the day-to-day things that you don't care to participate in. Why? Because you don't have to. And the houses don't have to be 6 or 800 or 900,000. You can literally buy real estate in different markets as low as 100,000, probably even less. I don't know how much less I would get, but here's the fact. Everybody's got a different goal. And here's what's super cool about rental properties and kind of odd to think about, that when you have a lower price point, then you have a broader audience of renters that can afford to pay your rent no matter where the economy's living, right? If my rents are really high and I'm luxury only, I'm going to be very affected by economic climate events if they change dramatically, because wealth might not want to spend that anymore.
Right,
But
right.
well-priced positioned real estate will often always have an audience, regardless of economy. And don't be scared of even renting to Section 8, because those are guaranteed payments that are never late.
I have a few Section 8 units and they're fabulous.
They
You
are.
never have to worry about them. Now, the tenants sometimes,
They needed help for a reason. And you know what I've learned? We all can't fit on the bus together. Somebody's got to take the train. So we all have different tools in life.
yes, yeah, yeah.
So I love it. And I love what you're continuing to do. Natalie, thank you for being so powerful in the community and city
Thank you.
of LA, making a real difference in this city. Some people are just kind of in the city, and there's others that are really making a difference for the city. And Natalie, you for sure do that. And your podcast and
Thank
everything
you.
you're putting together is just proof of what it means when passion shows up to help.
Thank you. You too. You too. I mean, tell us a little bit about this Phoenix program,
Oh,
this lending solution Phoenix program that,
yeah, Natalie, I was tickling earlier how fun it is when people are willing to come up with solutions.
right.
Here's what I've learned. Banks earn income when money moves. Movement with money is valuable. It can't stay stagnant. It needs to be borrowed, lent, leveraged. Movement is valuable for money to be profitable for the banks that sell it. So therefore, banks are often thinking about what problems can they solve. Well, one of the big ones that are out there is what happens for homeowners that already own real estate but want to move up to their new house. How do we do it exactly? Do I try to get the new house first and then try to sell the old house after? Because the new house I want to get most likely won't accept an offer that has a contingency written into it that I have to sell my house first. And if I don't, you've got to let me out of buying your house. In some markets that could work through different times, just not really well in today's climate. So then it's like the chicken and egg story. What do I
Yeah.
do first? And a lot of us use the simple recipe of I sell to get. And if I sell my house first, now I've got the money for the down payment and now I can qualify for the new home. But what if I can't find the new home? Now I've just sold my old home and now where am I going? How long do I have to live in this Airbnb? And so the chicken and egg story is what the Phoenix program is focused on resolving in a powerful way. There's so many people have come to the market with solutions to speak to this obstacle because it's such a big one for most homeowners. And a lot of these would be like even new industries born because of the problem. Open Door comes to mind as an iBuying platform that comes in and offers cash to purchase your house in the shape of whatever it is in right now. Of course, they pay less than what the house is worth, but it's
Right.
like trading in the automobile. We know the dealer's giving us less than we could have sold it for, but we give it as a trade-in anyway. Why? Because it's easy and I don't have to fuss with it. Well, these platforms were built to pay less to sell for more from you and I as consumers for that purpose. Open Door comes to mind. So that's a solution born to the chicken and egg. The other one are short-term loans that we know as bridge loans. These are lenders that exist in the market that bring their money to solve the problem that we as homeowners have, but we only get a temporary window to use their money. And for many of us, that's that fancy word of saying, wow, ouch, that was expensive.
It is
Right?
expensive.
is very expensive. And it's because they're solving your problem. Lenders make money over, Natalie and I know, over time. They're designed to be in most of these for 30 years strong. Banks make monthly payment income on our monthly on time payments. Bridge loans are short term, so their money's made in high interest rates and high upfront costs. It's a blend of both. The Phoenix program shows up, and it's pretty amazing what is busy focusing on. It has
Okay.
two different partners that show up together, and these two partners show up at different times. So partner A is our first friend that we get to meet. Partner A is our bank that guarantees to buy the house from us. See, for most of us owning real estate, we don't get to qualify for two mortgages running at the same time.
Mhm.
Many of us buy the houses we qualify to own. And carrying two of those at the same time doesn't always work for all of us. And that's why these solutions exist. So there are ways to get the new house you really want to get to because you won't qualify otherwise. So that's why solutions exist to our problem. The Phoenix program does an incredible thing because it pays off your existing mortgages on the house you live in. They come in and they guarantee to purchase the house you have. And they give you, unlike Open Door, they're going to do the same thing I'm speaking of right now. They're going to guarantee to buy it, but they're literally going to buy it from you now at that low price. The Phoenix program guarantees to buy it 6 months from now. So the Phoenix program guarantees to be your buyer. They provide the money up front. So they unlock the equity that you needed to use as down payment for the house you're wanting to own, and they pay off all of your existing loans on the house you're living in. So therefore, your income is no longer focused. See, even in a bridge loan, you have to make several payments. You have to pay the
Mhm.
bridge lender, and it gets expensive. You got to pay for both.
Yeah.
This you don't. In the Phoenix program, your old mortgages are paid in full and there's no longer any interest or payments for 6 months. You get to work with your realtor for 6 months to get the highest sales price the market can provide, but you're doing it living in your brand new home. And you didn't have to wait, and you got to the path of where you want next, and you do it in a very elegant way. So it's fun to win, and it's fun to see banks bringing solutions to the market that wouldn't have been here without high interest rates first. They would not have been interested in curing our problems. They are today. What a great time for you listening right now to pick up the phone. Say hi. Natalie is amazing, as you can already tell. I have a funny feeling you're going to love any visit you get to enjoy together. And why? Because it's not so scary anymore when you have a friend. It's only scary because you didn't know how to start. Well, you're meeting some fun folks right now, inspiring you to self believe, take on a phone call, paintbrush with new ideas, literally get out of your rental. And every time you say yes to low cost rent, you're saying no to equity development. And equity development is where wealth happens. Low rent does not build wealth, it builds low rent until the landlord sells the house and now you got to move.
Yeah. Yeah. Well, Scott, thank you so much. You are such a joy, like just such a beautiful joy. It's been wonderful chatting with you, and I appreciate all of your time and incredible advice and ideas on things and how you look at the buying process with the equity. All of it was just so informational and helpful. And I mean, I really hope people hear this because it's so important. And the way you deliver it is just, you just have such a way about you. It's amazing.
Well, that's gorgeous. Well, may I please, Natalie, you invite joy and comfort at a very high level. And please, again, for most podcast listeners, we're not podcast watchers. But if
Yeah.
you could, what you witness quickly is Natalie, when you're visiting, her warmth, that smile. It can help the emotional feelings we go through in life, especially in this event, feel that much safer.
Hmm.
Oh, you have a friend.
Thank you. That's really amazing.
Well, and it matters.
Yeah.
Ready to take on home ownership. for most of us, we didn't do it before. And as much fun as we think it can be, it has a lot of what if questions.
Yeah.
And passionate people show up to answer those. And
Yeah.
well, it's such a treat. I'm so grateful you put together such an awesome podcast. I love the name of your podcast, Mortgage on My Mind. It's not often on most of our minds. That's why we need passionate people that think mortgages are fun. Why? Because
Yes.
those are the people that dig deeper, that learn how to really do it. For people that don't, they're just answering the phones in call centers. Nobody's really teaching them much
No.
except how
It's
to overcome our obstacles that we might present on the phone call.
it's why I tell people when people are starting to get scared over AI and this and that and this and that, I'm like, listen, while it will take over for some things, it cannot take over for the job that we do. Can it take over for reading tax returns and pulling up this and pulling up this? Yes, but there is always something intricate and needing of an actual person's eyes to make it work. And you can't replace that. You can't replace, like you said, the warmth. You can't replace making somebody feel better about this very scary process. You can't replace being like, I'm going to need this and you're going to be fine and we're going to get through it and we're going to do it and we're going to close it and we're going to, like you just can't. You can't.
You know what I've learned, Natalie? I think one of the biggest gifts about working with a passionate mortgage expert is this. We, as the consumer who never took the class that they never provided, well, guess what? When we're speaking to the technology and the technology's driving us, remember, somebody was behind the technology to start with. Whomever has built the technology you're on, you're using their technology to go where they want to take you. And allow me to go further. Because of that, you're not going to know that it's the questions we didn't know to ask. And when you work with a passionate mortgage expert, what happens is that you discover strategies are available. You didn't know about them. Why? Because you don't do this for a living and you're not passionate and you don't think that Mortgages on My Mind is something that is your stamp, but it's Natalie's. Why? Because mortgages invite wealth development. It invites stories of living the life we have better. The benefits of home ownership are literally that incredible. And it's hard to realize it when we're hearing everybody else's story and it doesn't belong to us yet.
Yeah.
It sure has the right to. And remember, real estate owned can be done in many different ways. We don't always have to own real estate we live in. Sometimes we start somewhere else that's simply more affordable, but we simply begin.
I love that.
Yeah.
Love that.
I love this. And well, yeah, this is how, well, right? This is how we as consumers find paths to things that we weren't thinking of just before. I really love, Natalie, that you felt like it was super important to put together an awesome podcast to educate your listeners and inspire on many things, but one of them being mortgages and how do we actually get real estate?
Only mortgages. Yeah. Just it's so many people have questions. I've been on many people's podcasts as like the lender expert or whatever. And you don't get the time to really go through a lot of the things that people really want or need to understand about it. And so I just thought it would be helpful,
And it is.
Yeah.
Natalie, isn't that super cool? In the old days, it was hard to deliver great information. But in the modern days of life, you can, for those talented folks that are passionate about how they show up, they build podcasts. Why? Well, because you're listening to us right now. I'm so glad you did, Natalie.
I'm so glad we did, Scott.
Yes. Talk about fun and winning. That's exactly what's possible. I love it. Thank you, Natalie.
Yeah. Thank you, Scott.
Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info, and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.